I mean, the physical gold and physical silver markets are tiny relative to the size of one of the big
Yeah,
tech companies in the United States, like Amazon or Netflix or whatever.
yeah.
So it only takes a small amount of money coming out of these tech stocks and into the gold market for or the silver market for it to move. And I think whilst we're not seeing any decline in the tech stocks at the moment, I think there's a little bit of money coming off the edges as people say, there's something else I've got to put in the portfolio. I've done
Yeah.
very nicely thanks to the tech stocks, but what if, what's moving? Oh, yes, gold is moving. Oh, yes, silver's moving. I'll have some of that. I can always get rid of it by the end of the year if it goes down.
This smells more like a currency collapse than a bull market in precious metals. Yeah, technicals are important, but I think this is looks really ominous. Some people are saying that it's either a sign of hyperinflation or it could even be war.
People are losing faith in their money. Not just in its long-term value, but in whether it'll even hold up tomorrow. That, Mario Innecco and Clive Thompson warn, is what a currency collapse looks like in slow motion. They say fewer people want to hold dollars or euros for the long haul because the debt loads behind them have become impossible to ignore. Governments can't balance budgets, can't pay the interest without printing more, and every new round of stimulus chips away at what's left of public trust. Once confidence fades, it rarely comes back. And when people stop thinking in years and start worrying in days, that's the early stage of hyperinflation risk. Mario points to gold and silver as proof that something deeper is shifting. Normally, during China's Golden Week, Western traders push metals lower. This time, they couldn't. Gold held firm, and silver's recent close near $48 marked its highest weekly finish ever. That's not noise, it's a signal that money is moving differently now. Clive adds perspective. The physical gold and silver markets are tiny compared to the trillions sitting in tech stocks. It wouldn't take much, just a small reallocation of capital, to send precious metals surging. Central banks and major investors are already making that move. The public hasn't caught on yet. If trust in paper currencies keeps eroding, that shift could accelerate fast. And when it does, gold and silver may no longer just be hedges. They'll be lifeboats. If you found value in this breakdown, please hit the like button, subscribe, and share it with other investors who are paying attention. We're here to keep bringing you sharp analysis and voices that actually understand what's unfolding. Thanks for watching.
This smells more like a currency collapse than a bull market in precious metals. And the reason I'm saying this is because I hear a lot of people, I've been hearing for forever, for the last few months, that people are expecting a correction in gold and it doesn't happen. And that's why I'm asking myself, do you really want to take profit, let's say, of your in your physical gold and silver to go back into a currency or currencies, all currencies really are going down. Do you really want to do that and put your gold back into dying fiat currencies, the dollar included? For the miners, I would say it's a little different. You can take profit and then maybe reinvest your profit into physical gold and silver. Or you might want to get rid of your gold and silver if you need have an emergency. But all in all, I think yeah, technicals are important, but I think this is looks really ominous. Some people are saying that it's either a sign of hyperinflation or it could even be war.
Historically, gold has never run in a straight line, and this time is a bit of an exception. It seems to be every week it just heads up. Obviously, we've had our odd day, but what I've noticed is every time there's a little bit of a pullback, people step in thinking, I missed it all this way. I can't miss it this time. And they're buying each pullback. And what that indicates to me is that there's now an army of people out there who would have liked to buy it at the old price. They missed the boat, so they're waiting for the pullback. But the minute it pulls back, they feel they're in some kind of competition with everybody else who's in the same situation as them. So it's a question of who blinks first. So when the silver or the gold price goes down, it doesn't stay down very long, and then it starts to creep up, and then they say, "Oh my God, it's not going down anymore," and they rush in. So my feeling is we're in a new era now. It seems crazy to say that it should just keep going up in a straight line every week, and I still don't believe that's going to happen. but it is what has been happening for some months now, and yeah, it's unusual. But what's going on, as you say, Mario, it is a collapse in the currency which is going on. There's a rising distrust of holding dollars, or for that matter, any Western currency, for the long run. And I think there's two reasons for that. One, related to Western currencies in general, that they're seeing that the governments are now in a situation where they're unable to raise enough taxes to balance the budgets. But the second and more important thing is related specifically to the dollar. There's this growing unease about holding dollars because you just don't know what's going to happen tomorrow. We've had a non-stop series of surprises with tariffs, with threats to the enemies of the state, all kinds of things going on, left, right, and centre, and we don't know what announcement might come out of the woodwork tomorrow. So I think people are saying I can't keep, traditionally if I had dollars, it'd be fine next year, it'd be fine in 5 years. Now they're saying I'm not even sure if it's going to be fine tomorrow, and they're starting to move.
And there are symptoms to hyperinflation. And like you mentioned, people are not confident that the governments can pay the interest on their debt, and that one day, if investors don't want to buy new debt, they can't roll over the old debt, and that's the end. But also, I think people are losing the general public. They're losing faith and confidence in their leaders as well. There's a lot of division within countries. Unfortunately, I think the symptoms of hyperinflation are huge, and they've got nothing to do with no, normal cost push inflation. It's more when people lose confidence in the currency. And I'm going to bring up these two charts here, and I've been speaking about this for quite a while now, and I've called it a disturbing resemblance. Excuse me. That cold. And this is the map of value of one gold mark in paper marks during the Weimar hyperinflation. And this is what's called a fractal because it looks like the same kind of wave formation, but it's over a longer period, the one that we've got here now for the dollar. But ever since we broke this level here, Clive, this barrier, this is a monthly chart. It does look pretty much like a straight line. I mean, last week, I think we had a day where gold and silver went down quite sharply. But then if you look at the weekly chart, it doesn't look like anything happened. So, yeah, I think we are, I don't know, around here in terms of that.
Yeah.
So,
I saw that day when the gold and silver went down. I thought, oh, you know what? The bull market in gold and silver, maybe it's popped, maybe, and then the next day it turns around and shoots back up. And it was actually, it started going back up almost in the middle of the night.
yeah. And the thing is, this period of the year, right now, beginning of October, is when they have the Chinese, is it called the Golden Week in China? And,
Oh, yes, yes.
and usually the guys on Comex sell gold and silver in the beginning of October, but they haven't been able to do that. And China is coming back online, I think Thursday, because on Friday, I saw that silver was trading above 48. And then it closed. Look at it. It closed. I'm going to bring the chart up. It closed at 47.99, the spot price. Because I tweeted, I said, if it closed above 48, it would be the first time in history that it's a weekly close above that level. But actually, it's the highest weekly close ever, even at 47.99. I think here, Clive, in April 2011, well, that was the, let's do a weekly one and stretch the chart.
I mean, the physical gold and physical silver markets are tiny relative to the size of one of the big
Yeah.
tech companies in the United States, like Amazon or Netflix or whatever.
Yeah.
So it only takes a small amount of money coming out of these tech stocks and into the gold market or the silver market for it to move. And I think whilst we're not seeing any decline in the tech stocks at the moment, I think there's a little bit of money coming off the edges as people say, there's something else I've got to put in the portfolio. I've done
Yeah.
very nicely thanks to the tech stocks, but what if, what's moving? Oh yes, gold is moving. Oh yes, silver's moving. I'll have some of that. I can always get rid of it by the end of the year if it goes down,
Yeah.
but my client might be asking me about it, so I better get some.
So like, yeah, okay. April 25th week, 2011, the close was 47.90. So yeah, we beat that by 9 cents this past week. And talking about like because I think Clive, a lot of the people buying gold now are the big money, the central banks. I think the public's still not involved. But I saw a post on X, and I'll bring it up here for you guys now, about, I think about, let's see, about, it says here 39% of fund managers uh, will be unemployed soon. 39% of fund managers have a 0% allocation to gold per Bank of America. I mean, yeah, I think you've said that in the past, haven't you, Clive? That a lot of people who have their money with these fund managers are going to say, "How come you didn't have any gold?" Right? And they're going to be forced to start looking at gold, right?
Well, yes and no. I attended an investment conference a couple of weeks ago, at which various banks were speaking, and these were the chief investment officers of a number of different banks, and some of them, one of them, I happen to know this bank very well, was saying, yes, gold is the best performing asset this year, and we've been recommending gold. We got it in our portfolios, da da da. Then I go and look at my discretionary portfolio with that particular bank, and it's got a negative return and no gold.
Really, boy.
So that's not me, that's them.
Yeah,
So they're using the right words, saying we put gold in the portfolios, but the reality is they haven't done it.
yeah. Well, they're lying then, I guess.
Gold's surge against the Japanese yen tells a deeper story than most people realize. A decade ago, under Shinzo Abe's early leadership, gold traded around 60,000 yen per ounce. Today, it's nearing 600,000. That's not just gold being strong, it's the yen collapsing. Mario Innecco says Japan's years of money printing, zero interest rates, and endless stimulus have finally caught up. Demand for physical gold is now so intense that some Japanese dealers have had to pause sales because they can't meet demand. They argue that the idea a nation can grow its way out of debt is just political spin. In practice, it means currency debasement, rising prices, inflated assets, and quietly eroding savings in dollars, bonds, and pensions. People don't notice it right away, but purchasing power drains year after year. Clive Thompson warns what comes next has happened many times before. When the public finally understands that inflation isn't a mistake but a deliberate policy, panic follows. Economists call it the crack-up boom, a rush to swap paper money for anything real, land, goods, metals. History's seen it with the continental dollar, the French assignat, and the German mark. Japan's path now looks dangerously familiar. Let's get back to the interview.
Yeah, and here's the price of of gold in Japanese yen. I mean, I've been keeping track of this for years, and we're almost at 600,000. And
Yes.
back in let's say this is when Abe took over, 2013. It
Hmm.
took a while for it to go up, but it's back in during the '08 crisis, we're at 62,000 yen. Now it's almost 600,000. So I think it's gonna continue. And I saw some posts on X that some Japanese precious metals dealer have had to like stop the sale of some gold and silver uh, bars because there's so much demand for it. So I think it's a worldwide event.
Somebody wrote to me on LinkedIn and said that he had heard that the Perth Mint had run out of silver bars. But when I tried to verify that, I couldn't find any
Yeah.
any proof of it either way.
Yeah, I mean, a lot of those stories, they come up. I think the best thing really is to keep an eye on the price, and I think this coming week could be when we bust bust through that 50 level, which has been the limit for since 1980.
I've got something I'd like to read to your viewers, Mario.
Yeah,
Um, this is from artificial intelligence, but it is quite relevant to what's going on in the world today.
yeah.
And I'll read it to you. It says, history offers a clear and consistent message. Governments, when faced with overwhelming debt and deficits, will not hesitate to sacrifice the value of their currency and the savings of their citizens. This can be done slowly and insidiously through inflation and currency debasement, or quickly and brutally through defaults, bail-ins, and demonetization events. So there you have it. We're now in that situation where many governments are facing overwhelming debt and deficits, and the question is how are they going to set it right? And the way it gets set right is not by saving the citizen. It's not going to be saving the man in the street.
And I think what gold and silver are telling us is that this process is not going to be gradual anymore. And if you don't have some gold and silver, and if you don't have hard assets and the assets we were talking about earlier, you're going to be wiped out. And yeah,
Well, this is exactly what the artificial intelligence article carries on by saying. It says hard assets,
yeah.
and I read it word for word because it's not me saying it's AI. A significant portion of your portfolio should be allocated to tangible assets that cannot be created out of thin air. This includes real estate, especially productive agricultural land, precious metals, with a primary focus on gold, and other physical commodities. There you are. That's what it says. And um, I don't know if anyone believes what ChatGPT says, or this wasn't ChatGPT, it was another AI, but
Yeah.
that's what an AI actually says.
I agree with that. And Vince Lancy yesterday he posted Trump said America can grow its way out of debt. What it really means is debasement. And then he put the price of all things will go up as the spending bubble is encouraged. Yeah, I think this is what will happen to your savings if you leave them in government bonds, dollars, and yeah, and other insurance policies and pension plans. I think it just proves that. Um, because in the 70s, I remember the 70s and early 80s, we were told that we had inflation because oil prices went up, and I believed in that. But when I started learning about money and fiat currency in the early 2000s, then I realized that all that was like a cover, because the reason we had inflation in the 70s was because Nixon detached the dollar from gold and they started printing. What the oil to gold to oil ratio is telling me is that we have a currency crisis, and even oil is going to be cheap for people who have gold. And the
Well,
other
well,
thing, it
you go,
helps
Ronnie.
the mining companies, right, Clive? I'll let you.
So, the oil price this year has been heading downwards generally. It has its ups and downs, but the broad direction this year has been down, 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 which tells me that the world economy is slowing. But at the same time, we've got the gold price rising, which means that each ounce of gold buys you more oil than it did the month before.
Yeah.
So why are people so it's kind of a distinction. We've got it's not a generalized rise in commodities we've got a generalized move into gold because gold is seen as a monetary metal, and central banks are supporting it. And they don't, central banks literally do not seem to care what price they pay for gold. They're not price sensitive because whatever they buy the gold with, they're printing it anyway, and they got loads and loads of dosh. So, but on the other hand, oil is much more concerned with by how much people are using it, and people must be using less unless they're producing more of it for the price to be going down.
Oh, Clive, I've also done because I think it was Incrementum, Incrementum, they did a Porsche to gold ratio. So I wanted to know Porsche 911 price to average gold price ratio in British pounds. So back in 2000, you needed 360 ounces to buy a Porsche 911. And I updated it today to the not the average price, but I put the current price, and it's 36. So I think this is telling us we have a currency crisis. But then finally, the masses wake up. They become suddenly aware of the fact that inflation is a deliberate policy and will go on endlessly. A breakdown occurs, the crack of boom appears. Everybody is anxious to swap his money against real goods, no matter whether he needs them or not, no matter how much money he has to pay for them. Within a very short time, within a few weeks or even days, the things which were used as money are no longer used as media of exchange. They become scrap paper, and I put here scrap digital entries. Nobody wants to give anything away against them. It was this that happened with the continental currency in America, 1781, with the French mandat territoriaux in 1796, with the German mark in 1923. It will happen again when the same conditions appear. If a thing has to be used as a medium of exchange, public opinion must not believe that the quantity of this thing will increase beyond all bounds. Inflation is a policy that cannot last. And I think, Clive, that could be happening in Japan very soon because they've got this new prime minister who wants to keep inflating.
Yeah, I mean, for sure, it's already happening in Japan because you only have to look at the value of the Japanese yen against gold and see
Yeah.
how many extra yen you have to pay to buy gold today than you did a week ago or a month ago or a year ago. And of course, you mentioned a few examples of countries, but as we walk around the world, we'll find that country after country had their meltdown. Starting not just starting, but one of the earlier ones was the ancient Roman coin, the denarius, where emperor after emperor found it expedient to reduce the amount of silver in the denarius until it got to the point where the merchants would no longer take it as a silver coin. They would only take it as if it was made of copper. But you can look around the world. You can find all kinds of places. You know all about Brazil because your parents came from were there at some point. But look at Turkey. We're in a high inflationary environment in Turkey. Why? Because there's been too much interference with the central bank. India has got rid of its high denomination notes, wiping out two-thirds of the currency in a fell swoop, at the expense of the holders of paper notes.
Across history, every monetary system has carried a silent timer, ticking from trust to doubt, from confidence to collapse. What we're seeing now isn't just market volatility, it's a structural unraveling of belief in fiat money itself. The signals are everywhere: currencies weakening against gold, nations straining under debt, and investors quietly shifting toward tangible stores of value. The story isn't about price movements anymore. It's about endurance. What kind of money can still hold meaning when promises no longer do? When the foundation of modern finance starts to fracture, the real question becomes, will people recognize the turning point before the system demands a new kind of trust altogether? So stay tuned. If you're into real, data-backed takes on the financial system, hit like and subscribe so you don't miss the weekly updates. Thank you for the support, and I hope you enjoy the video.